Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, my name is Ravi Singh. Welcome to another edition of our weekly podcast. Global equities trended higher over an eventful last week. Chinese equities rallied post the Politburo meeting as top leaders pledged to ramp up policy support to boost a struggling post-COVID rebound in consumption and economic activity. US equities rose on positive earnings reporting during the week and strong economic data leading to expectations of a soft landing scenario in the US. Among notable events during the week, the US Federal Reserve raised its benchmark interest rates by another 25 basis points to a 22-year high and added that it will continue to assess additional information and its implications for monetary policy. This was followed by European Central Bank, which lifted its policy rates by another 25 basis points, raising the borrowing cost to their highest level in 23 years, and indicated it was prepared to raise rates at sufficiently restricted levels for as long as necessary to achieve a timely return of inflation to the 2% medium-term target. And finally, the Bank of Japan tweaked its yield curve control approach in its latest monetary policy meeting, potentially allowing the long-term interest rates to exceed 0.5% and the Bank of Japan to buy 10-year Japanese government bonds at 1% every business day. This move was likely aimed to introduce greater flexibility in policy management and mitigate market distortion as it takes cognizance of the fact that inflation has remained above 2% since April 2022, with the latest CPI printing at 3.2% year-on-year ahead of market expectations. For the week, the MSCI World, MSCI Asia ex Japan rose around 1 to 3%, while the MSCI China Index rallied over 6%. In the US, the S&P 500 Index, Dow Jones Industrial Average, and Nasdaq Composite Index rose around 1 to 2%. Back home, Indian equities snapped a 4-week winning streak. The Nifty Index started on a weak note and remained volatile on mixed cues amid improving monsoon, mixed earnings reporting, and foreign investor outflows to post a weekly decline of 0.5%. Broader markets outperformed Nifty Index this week, with the Nifty Small Cap Index up 0.6%, while the Mid Cap Index was up 1.5%. Among sectors, utilities, realty, and pharma led the rally with gains of over 4.8%, while the IT, banks, and FMCG were laggards with cuts of over 1.3% during the week. The Indian fixed income market came under pressure over the week, with Indian government bond yields rising for the week, driven by a surge in US bond yields amid still resilient US economic data, tweak in Bank of Japan's yield curve control policy, and lower demand at the RBI's weekly debt auction. The INR depreciated against the USD last week under pressure from rising crude oil prices, stronger US dollar, higher US bond yields, and foreign investor outflows. For the week, the INR depreciated 0.4% to close at 82.3 per dollar. Brent crude oil rallied near 4% for the week to close above $84 per barrel, driven by better than expected US GDP data for the second quarter this year, boosting demand outlook and output cuts announced earlier this month. At this point, I'll take a pause and thank you as always for listening. If you find this podcast useful, please like and subscribe. Have a great week ahead.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.